Hello everybody, welcome to the technical analysis webinar this evening. My name is Troy. I'm a senior account manager with AvaTrade. I'll be presenting this evening. Before we get going, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. Looks like we're up and running fine. I've got enough responses. If anyone runs into any issues as we go along, just let me know. Farah, the gold market, we'll certainly take a look at that. I see you're asking buying or selling. Yeah, one of those, right? There's actually looks like a nice opportunity, technically speaking, to have an opportunistic entry point with gold after the last few days, trading days of movement. I think it looks probably pretty nice as a technical entry point to have some limited risk with much higher profit potential. So we'll take a look at that and many other assets as well. So let's get going. Keep in mind, as always, all trades have risk. No one trade. We'll also look at the pound. Yes, that's in the running to look at the GBP. There's some headlines about the Brexit and such. So we'll look at that. As I was saying, no one trade obviously is guaranteed to profit. We all understand that. You should probably manage risk in one way or another with a stop loss, hedge position, or some other way. We do have a unique feature called AvaProtect. If you're using the AvaGo mobile app, you might check that out. You can protect against losses on all FX pairings, gold, silver, by paying just a small premium cost when you're setting up the order. So that's an option for risk management as well. We'll take a quick look at that as we get into the fundamentals a little bit before we do the technical analysis. Keep in mind that what we cover is meant to be from an educational perspective, not to be taken as financial advisement. The idea is to add some tools to your tool belt, some strategy concepts, some information sources, so that you can hopefully improve upon your P&L at the end of the day, end of the week, etc. What we look at with technical analysis, just real quick, the general idea are the historical movements, obviously, on the candlestick charts, and we're looking for repetitive patterns. We're looking for something that would help predict maybe what we think would be likely to occur in the future based on what we see has occurred in the past, whether those are price levels, trends, ranging movements, etc. And sometimes we add indicators to help us out with that analysis in terms of the manual analysis that we do. Indicators many times can help you pinpoint where you have more or less confidence as well. As we go along, feel free to ask questions, give input, make comments and suggestions. All is open. Okay, so I mentioned the AvaTrade Go mobile app. We can take a look here under the trading platforms on our main website. You see AvaTrade Go is listed as one of the platforms. That's our mobile app. Also, if you just log in from the main website, if you have the web trader activated on your account, and if you don't, you can ask for it to be activated. When you log in from our main website, you would be in the web trader platform, and that platform has the same features that I'm about to show you that are on the AvaTrade Go mobile app. And so what's nice about the mobile app, obviously you can download it from your app store or just follow the links here to your app store. And what you'll notice are some risk management features in the order window. When you put the trade size, the lot size, it tells you how much margin is required, converted to your account currency, which is nice. It also, if you do AvaProtect, you can protect over certain periods of time, 1 hour, 1 day, 2 days, 3 days, etc., for a premium cost. For a small premium, any losses during that covered time period are added back either when the trade closes or when the protection ends, whichever happens first. And if you have profits on the trade, all of the profits are yours. You just pay the small premium up front. So it's a nice risk management tool, especially if you think there are maybe some volatile moments or days ahead. And so it's a measured risk for a measured period of time with really unlimited profit potential. And then if you do your take profit or stop loss marks, it will tell you how much you're risking based on your trade size and the distance to your stop loss. And it'll tell you what your potential profit is based on your trade size and the distance to your take profit. It'll tell you right over here on the side in your account currency, converted, telling you what your potential profit would be and what your potential risk would be. So it's a very nice tool to save time, and also for beginning traders, for both experienced traders and beginners, as a time saver, and also to confirm if you're not sure how to do that type of calculation. If you can't see my screen, Adam, I think you need to check your setup, because I checked and everybody was okay at the start. Everyone could see my screen. So I think it's just on your side. So double check. Maybe there's a window you need to expand. There's something maybe you're missing, but everything's up and running fine from my side. Okay, very limited day in terms of fundamental news. It's a bank holiday in several locations, including the US. But one of the main headlines today, Brexit back in crisis. EU warns over UK divorce pact. Okay, that's one article, right? Kind of fearful article. But then when we look at another source, Reuters, they say economists not really so into this rhetoric about Brexit. And they're sticking to their no deal, or I'm sorry, they're sticking to their Brexit forecasts. They're not getting caught up in the no deal rhetoric. So kind of a non-story in the end, according to the economists in this article. So, but sure, it created some fear with the pound and maybe some downward pressure. And we'll take a look at the charts with the pound. And then if we look a little further, economic calendar, we see bank holiday in the US, Canada, Brazil. We've got Labor Day both in the US and Canada, Independence Day in Brazil. And kind of a slow day in general on announcements. Some negative numbers and positive numbers came in. Mixed news out of China. Imports down, exports up. I don't necessarily view that as bad news for China. They probably like the fact that imports are down and exports are up. It's probably good for their economy. But in general, you don't like to see even the imports miss by this much. They're actually in the negative. But that might be something intentional maybe on China's side as well, trying to beef up their factory activity and exports in some way. And their trade balance actually improved because of that. Obviously, if you have better than expected exports and lower than expected imports, then your trade balance is better than expected. So they got 2 out of 3 here that were positive, actually. All right, great, Adam. I'm glad you're back and you can see the screen now. Okay, so South Africa, maybe some negative numbers. EU, some mixed numbers came in, but not a huge day on the markets in terms of announcements. Pretty slow day being a bank holiday. So with that said, let's go to the charts. It's a good day to have a technical session since there's not huge news on the markets other than the fear about the Brexit arguments or the no deal or deal arguments with the Brexit. Now, one thing to look at here, and this is a trend that I think we're going to kind of do with this webinar, is looking at the larger candles and seeing what's happened over the last few trading days to create opportunistic entry points for bigger picture type moves. The past couple weeks, we've actually been doing a lot of scalping type strategies, and we've done very well with it. But it sets up nicely today for some technical trades in terms of the entry points, the amount of risk you need to have, and the potential profits. It sets up nice for some longer term technical moves on some of these major assets. So let's just start with the Nasdaq since I have that on the screen. Obviously, we see a ceiling was established up here in the Nasdaq, way up here at record highs for the Nasdaq, over 12,400. Okay, 12,447. Then we see a pullback with some fear that hit the markets late last week and into the day today. And we actually see a stabilization today, a bouncing up on the 4-hour candles today, going back, 4, 8, 12, 16, 20, right about here's today's start. And we see it stabilized and came up. And if we look over here, we can find a support level where that happened. Okay, there's an old resistance here, resistance, predictable reversal here, from this resistance mark here, and then a breakthrough, and it became perfect picture support level, where this reversed from resistance to support, and up. Okay, so now it came flying down last week. It tested the support, it broke it by a hair, but right back up. Okay, and then we see the retest today, and it bounced right where you'd expect, right up off that support. Okay, there's the bounce, expected support level, test and bounce. Okay, so what's the move here technically speaking? Samar, I guess I can't tell her. I better type it. Samar, please check your audio. Okay, so let's continue then. We're looking at a support level down here that was verified with a bounce, and we can see existed here as resistance, breakthrough, support, broke by a little, back up, broke by a little, back up, and bounce. Okay, so it looks like it will take some significant news, technically speaking, to break this price level that would stay below it and keep dropping. It's tested twice and went right back above it. Okay, so what we're looking at here is if you put a stop loss below this wick right here, you're below 2 support levels. Okay, so we're looking at support level here and another support level here. Support, you see this here, which is right where this wick bounced up from when it did that test. So on longer term moves, many times it's helpful to stay with a trade, even if one support level, in this example, buying, so one support level might get broken. If you want to be patient, then you maybe have 2 support levels that it would have to break before you give up. So if in this example, I'm saying, okay, let me take a buy position on this, then I'm looking at support level or stop loss below 2 support levels down here at 11,070, let's say, or 75, and just moving that a hair. And potential profit, if it's a longer term move, you're waiting for it to approach the recent highs potentially, or maybe this support level right here, depending how patient you want to be. There's no reason why eventually these indices won't test the highs that they've already reached. Now, it could take a long time, but eventually, if you look at the historical data on 1 month candles, even with large pullbacks, they eventually reach new highs, right? So we're just looking at likelihood of occurrences. And since this is a longer term move, you have some options. You could say my take profit would be just before this resistance up here, or you could say my take profit would be before this support here, that then should be resistance, and is, you see it here, resistance. That's another classic flip. Support level becomes on the breakthrough, when it bounced back up with this wick, resistance. So this is your first resistance, this is your second up here, okay? And either one gives you a nice ratio here. If I take a buy position on Nasdaq right now, okay, and let's say I do 0.1, okay, so that would be 10 indices, and I buy. Okay, I'm in. Now I say, okay, I wasn't real particular about my entry point, meaning I didn't wait for it to pull back down to this support level before I bought. I could put a buy limit down there and wait, and maybe it pulls back down, maybe not. I have someone else complaining about audio. Can just give me an okay if you're still hearing me clearly. All right, great, thank you. So I'll just let John know it's just him. Okay, so as I was saying, we've got a couple options. Now, let's say I took a buy. Why am I not being more particular about my entry point? Why am I maybe not waiting for this to come down to the support level potentially before I buy? Because I already said this is a longer term type move, right? We're not scalping small movements with this simulation. It's a long-term type move, so I'm less particular about my exact entry point. Doesn't mean you couldn't be. You still could be particular and put a stop, you know, a buy limit, I should say, down here to buy from a lower point. But the concept here is longer term move, less exact with entry point. So now I'm saying, okay, stop loss, I put it 11,072. Why? Because that gets me below 2 support levels. It would really have to be a swing in the market to cross me up there. My take profit, if I want about an equal potential profit to risk, my take profit would be here, 11,850 or so, the first resistance level. If I want a larger potential profit compared to my risk, then I'm going with the second resistance level up here, 12,000, let's say 375. 12,375. Okay. All right, so now I'm in, and let me get rid of some of these lines I drew, or just slide it a little bit. Okay, there was my second support level. Here's my stop loss. Okay, so I've got my stop loss below 2 support levels. It would have to crash, break this support, break this low point that it tested, break that support before I give up. My risk is about 1/3 of my potential profit up to this take profit line up here. Why am I looking at a take profit here? It's just before the all-time high. Okay, which would be a pretty major resistance level. Most likely, as the price approaches this level, if it does, we would assume eventually at some point it will, then you would expect a pullback, even if temporarily, a pullback as the price reaches here. So that might be a good spot to take profit or take a partial profit. Another spot where you might take a partial profit would be if it hit this price level, which is the first resistance level, this old support level here. Breakthrough resistance. So if you're watching it, you could manually do a partial close as it reaches here to preserve some of your profit, and then let the rest run to the high mark. Yeah, okay, John, no problem if you showed up a little late. Okay, so we get the idea here. Why leaning towards up rather than down here? Technical entry point. Pure technical entry point. 2 support levels close below that have held quite well and are well established, and a recent high that's 2 to 3 times higher than what I have to risk to go after it. Okay, how much will you risk? It depends on your trade size. Depends on your balance, what trade size makes sense for you. Now, with that said, if you think it'll still pull down to that support level again to test it again, by all means, you can sell. But that would be more of a short-term move because it's almost to that support level, and we're looking more longer term. The U.S. is looking to pass stimulus still. Okay, and if that happens, that could buoy the market right back up. There are some reasons, some fundamental reasons out there why this could race back up to the highs that it established just last week. There's a potential for that to happen. And we all know trading is not about guarantees, but about potential. And there's a huge potential for this to climb. And maybe in your mind could be more likely then to break 2 support levels. With that said, you could have a sell stop down here. If you think that something crazy could happen and break these 2 support levels and crash, you could prepare a sell stop down there. I'm not in a hurry to do that on this particular asset though. Okay, so we could also take a look at oil. So let's take a look at US crude. And you see the drop. Again, this type of rapid drop, this type of rapid movement creates opportunity, creates opportunistic entry points, technically speaking. Okay. Niall, I'm trying to read your question. Rephrase your question, Niall. I'm not sure what you're asking. You're asking what was the name of that trade size you were talking about earlier. I'm not sure what you're asking, but you could rephrase the question. Okay, so if we go to 1-day candles, now we see the support level, right? When you look at 4-hour, you can't tell, why did this stop dropping? It was plunging, and look where it stopped. It hit and just went sideways. All day today, the market went sideways. Why? Why did the market go sideways? We go to the 1-day candles, and we say, when we look at oil on 1-day candles, we see a support level right there. Okay, you see 1-day candles, support up, support up, support up, and it hit that spot and paused. Okay, flat out paused. So it doesn't take much risk to trade up off this support and have your stop loss somewhere just below it. If it goes up, your potential profit runs up to the first resistance. Major resistance is here, all the way up at 43. Okay, so the resistance is $5 up or so per barrel on the 1-day candles, and the support is 25 cents down. So it's a huge ratio in your favor to risk just a small amount below the 1-day candle support and have a much bigger potential profit to the first 1-day candle resistance. Okay, so that's something to look at. Now, something else to take notice, you see this gap over here. Okay, that was from a Friday's close to a Monday's open back, if you were paying attention back then, when oil plunged. If you remember, there was a bit of a price war between Russia and the OPEC nations. They were upping production when there was already an oversupply. The OPEC nations were trying to drive the price down on oil to punish Russia for not being willing to cut production like the OPEC nations did. And so that price war caused a huge gap. And then on top of it, the pandemic hit and oil dropped on some of the futures contracts to zero. Okay, that was this huge crash. Now this then became an important gap. And when the price met the bottom of that gap here, we kept saying when it breaks into that gap, you should buy according to the theory of trading on gaps. Once a gap gets entered, usually it has a good chance of filling that gap. And that's what happened here. It broke into the gap and filled it. Then we were saying, if it gets to the top of the gap, sell, because that's a major resistance level that it likely, even if only temporarily, will bounce back down from. And that's exactly what happened at the top of the gap. It hit the top of the gap and dropped. Then it hit the bottom of the gap again, went back up, hit the top of the gap and dropped. And we were just waiting for it to break above the top of the gap. And once it did that, it just meandered right above the top of that gap. So we're waiting for two things, really. We're waiting for a move that could run all the way, once it's above the top of this gap, to the next resistance level on the 1-day candles, which is way up here, around 48. Something that could cause that to happen, the US election. The more and more people might believe Donald Trump would win, the markets have liked that. As he gets better poll numbers, the markets go up. It creates more optimism that there'd be larger demand for oil, etc., helping to drive commodities up and equities up. And the opposite, if it looks like Biden has a chance, who he already promised he's going to raise taxes on corporations, all kinds of maybe not positive things in terms of how the markets look at it, then you see the opposite. You see potentially a pullback down. All right. So the US election, I think, will play a strong role as to whether oil is going to work its way all the way up to this resistance level here above the top of this gap. All right. It tested that gap and never stayed above. You see it was right on that line, went above it a little bit and right back down. So right now, oil, yeah, we could go over the trade size I was talking about earlier. Sure. I lowered the trade size on Nasdaq from 0.25 to 0.1. It wasn't anything very meaningful, but we can go back. We'll take a look at it. Okay, so what we're looking at here now is the oil dropped into this gap. It's right in the middle of it, actually, the top and the bottom. But if you look here, you see this wick? That is a support level now. This wick right here acts as potential support on the chart. And you see that's not far down. So what you could do if you're looking to take a move on oil is put a pending order. If you think oil could push down further before it would maybe bounce back up, you can see that this here is the support level that you would say, wow, it's close to filling the whole gap back down. And it took a pandemic and a price war for it to drop below this gap. The pandemic's improving. The therapeutics are improving. There's likely going to be a vaccine maybe by the end of the year, maybe sooner. And there's no longer a price war between Russia and OPEC. So why should it break the bottom of this gap and plunge again? You might be confident to say, if I put my stop loss here below the bottom of this gap, below the top of this wick, then I could look at a long-term move on oil to maybe reach 48, somewhere up there before it would break this support level down here, before it would break below the bottom of that gap. Just understanding the fundamental reasons behind the technical layout of this gap, it really helps you understand the likelihood of maybe of potential success on a move like this. Okay, Azam, yeah, we're going to take a look at gold. So if I'm going to say, okay, I'm taking a buy right now on oil, okay, fine. Or you could wait and see if it tests this support level. That's up to you. How patient would you want to be on oil? But if you believe that economic optimism, gaining control of this pandemic more and more is going to happen, then you might be bullish on oil to eventually get to where it's at a price level that's profitable for the OPEC nations and for the US and for Russia, etc. Okay, and so let's say I don't want to try and be perfect, because we went into this saying we're going to not scalp the market with these strategies, but we're going to look for longer term type moves. In that case, I don't mind if I enter now and it drops a little bit more before it goes up. Okay, the concept here is I'm going to be patient. I understand it could pull down a little more before it goes up. And so in this concept, I'm putting my stop loss below the bottom of that gap, being willing to risk that much on a limited loss for a potential profit that's about 4 times more, just below this major resistance level up around 48. Okay, and so longer term move, crude oil, we're looking at, if you do market execution, that's fine, whatever you choose to do. Here's a 100-barrel move. Okay, now you do the trade size that makes sense for your balance, obviously, and your risk exposure. And obviously, you make this move only if it makes sense to you. So what we're looking at here then is to get below the bottom of this gap down here. I want my stop loss around, let me use the crosshairs. To get below that, I want my stop loss around 34.5. Okay, so then I'm going here and saying stop loss 34.5, and my take profit just before this resistance, let's say 47 or 47.5. Okay, so there's a market move. Potential profit is up about 9 barrels or $9 per barrel, and my risk is about half that. Okay, a little less than half that. So I'm entering it 39 and change, stop loss at 34.5. We're talking $4.5 per barrel down, 9 barrels up, 2-to-1 ratio approximately. Okay, you can be wrong on this. You could be 50-50 on moves like this, and you're making a really nice profit, because you're making twice on the profit end as you are on the loss end, minus the overnight interest. Okay, so which really isn't so large, as long as it doesn't take months and months and months or years to get there. And really, with the election coming up in less than 2 months, this could be like a 2-month move. Okay, you could even put a time limit on it, and if it doesn't get to where you want it within X amount of time, then you manually close the move. In any event, this is a limited risk move. with my stop loss below one support level here on the 1-day candles and a second support level, which is the bottom of the gap. So I've got two support levels that it would need to break before I give up. And my intention is to try and let it run up to the first major resistance level on the 1-day candles up here. 2-to-1 ratio potential profit to risk, while also being very patient with two support levels on the 1-day candles. Okay, 100 barrels here would pay times what, $9 a barrel up, about $900, risking 450. So you know, on my demo balance, if I have 100,000, that's about 1% potential profit. Probably with 100,000, I would take a bigger trade than that, right? On a longer term move, I might be going for maybe a larger percent profit than that, but that's up to everybody, right? It's up to you what percent risk you would do. And maybe I put a pending order down here in case it tests the first support level or the second one. I put a buy limit to enter a second time from a better price, because it could pull down before it goes up. And then maybe you enter with a second move, and that's why your first move is limited percent. What kind of pending order would I put just above this support level down here if I wanted to enter, just in case it drops to a better price, if I wanted to enter a second trade? What kind of pending order buys from a lower point? And then I would be risking less on the second one if it entered, because the stop loss would just have to be a short distance. Yeah, buy limit, exactly. So I think it's kind of maybe a nice idea with oil, the way it sets up, to put a buy limit pending order to buy if it hits 36, right? If it hits 36, and my stop loss still is going to be the same as the other one at 34.5. So on this one, I'm risking a lot less distance to my stop loss. So this one I'll enter maybe with 250 barrels, 0.25, okay? And my take profit would be maybe up here at 47, 47.5 also, okay? 47 this time. Oh, I didn't type the app price. Okay. Enter at 36. I thought I typed it. There we are. Okay, so now I've got a backup. In case this drops, I actually can be excited about the fact I'll get to re-enter with an even larger trade at a better price, just above that second support level. Okay, with a very small risk on that one, because now I'm right above that, the top of that gap or the bottom of that gap, and I don't have to get far to my stop loss to be below it. So I'm happy if it goes up in the beginning in this example and it takes profit. And I'm actually happy if it activates the second one and then goes up. I'm even happier probably. So I don't have to be so upset if the first one doesn't start the right way, right? Okay, again, this is a strategy of long-term moves. Okay, I don't care what it does in the next day or two or three. All right, so let's take a look at gold. I've had several requests. Let's look at gold, but this sets up nice around this gap on oil. It's really been a nice gap for trading all the way through for the past months. It's been tremendous trading around that gap. All right, so gold, let's find it. What did I do with my gold? There it is. Okay. And this sets up nice on the 1-day candles. Remember I said it's an opportunistic day for technical analysis? There, 1-day candles. This was a breakthrough move here, tested with this wick on the 1-day candles and held, okay? Came down, tested again, held, broke below and right back up the same day, tested it down, came right back up. And since then, it's held once, twice, 3 times, 4 times, okay? So we're above a pretty major support level on gold. It's been tested on 1-day candles. It's held for weeks, okay, with only one breakthrough that went right back up. Okay, so the odds, if we look at the historical data, are on our side that, hey, maybe this will bounce rather than break. That's just pure technical analysis. And now we look at the opportunistic setup to get below this support level, you can put your stop loss here. Doesn't have to be very far. Or if you're more patient, below this wick, which would be 2 support levels that it would have to break. And since we're doing long-term moves, then we'll stick with the same concept. We'll go below not just the 1-day candle support level here, but the tested wick that then bounced back up to get below that level as well. That's up to you, obviously, where you want to put your stop loss. But in this concept, we're going below 2 support levels on each move with a much larger potential profit to the recent ceiling that was established. So even going below 1, 2 support levels with your stop loss, putting your stop loss somewhere down here, you still have about 2 or 3 times potential profit to the first major resistance level compared to your risk. Okay, so we've done 3 setups this way now, where we're looking at much better potential profit to the first major resistance with having to risk half or 1/3 of what our potential profit is while being supported by 2 major support levels. Okay, so I like that idea. I like that setup. I only need to be right on 1 out of 2, 2 out of 4, and boy, do I have a nice payout. And in some circumstances, 1 out of 3, and you're at least breaking even. Okay, so we're looking at what's the potential for a bounce off of here. If I say, okay, I'm going to take gold and buy right now, okay, fine. Determine your trade size. 1 full lot is 100 ounces, so 0.25 is 25 ounces. Maybe I want 100 ounces. Maybe I want $100 risk per dollar movement on the chart. Okay, again, it depends on your balance. What's the appropriate trade size? Maybe you only want 1 ounce, not 100 ounces. It depends on your balance. Okay, so volume, let's say 1.0, and I buy. Okay, I'm in. Then I say, okay, where do I want my stop loss? I want it below this support level where we see support, 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 support. But I also want to get below this support level where I see this wick hit and bounce back up. So I'm going to get below all of that and put it down here at 1830, okay, or 1835. So I go back, I say, okay, modify. I'm going to put my stop loss at 1,835, and I'll put my take profit just before this major resistance up here where it reached that high point, maybe at 2,050. Okay, so there we are. We see potential profit about double my risk. Okay, now if you want a lot less risk, you could say, you know what? I'll only put my stop loss below the 1-day candles. Okay, 1-day candle support here, support, 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 support. If it breaks that, you could be out, even smaller risk. Okay, that's completely up to each trader. In these examples, like I said, we're putting the stop loss below 2 support levels. So now it's about a 2-to-1 ratio, risk to potential profit, or maybe about 60-40, something like that. Okay, John, no problem. I understand if you're leaving early. I'll talk to you another time. All right, so any questions so far on these setups? And again, on these moves, the idea is longer term. This could take weeks to come to fruition, okay? It's not something where we're looking at it right now and saying, oh my gosh, I'm down $148. The potential profit on these are in the thousands with the 3 trades that we set up there as examples, okay? Okay, great. All right, so there were some other requests. I had someone ask about the pound. I think the pound against the yen is a smart move right now because of the fear factor with the pound. As fear goes down, the pound should go up. And as fear goes up about Brexit, the pound should go down because the yen is a safe haven. Yeah, absolutely, Daniel. Fundamentals affect all the movements on the charts, okay? And so we talked a little bit about why we think oil could go up with the US elections. If there's, the polls have been looking more and more in Trump's favor, and the markets like that. And so there might be some more polls coming out. And if they come out and show Trump gaining more ground in these, what they call battleground states, the key states for winning enough electoral points for the presidency. If things continue to improve in that way, you could see the markets respond really positively. And then another reason would be that there's likely going to be some kind of stimulus deal eventually here in the US for more economic support. And that could drive the markets up, which a lot of times pulls oil with it. Okay. Why would gold go up? There is a pandemic still. It's not solved yet. And we've got a nice support level here. So this is just an opportunistic move. And believe it or not, as the markets have been going up, so has gold. When have you ever seen the Nasdaq hit an all-time high, the S&P 500 hit an all-time high, and at the same time, gold hit an all-time high? Gold has actually been following the markets up. So if there's reason to believe the markets could climb, well, it seems backwards, but gold has been climbing as the markets have gone up. So fundamentally speaking, it looks like there could be a fundamental reason for gold to climb also. Okay. Yeah, it's always good to combine technicals and fundamentals. Absolutely. It helps out. All right. So, but a lot of times, by the time you know the fundamental news, it already happened. And if you just had a pending order waiting, like below here, you could have a pending sell stop. If it breaks that support for whatever reason, some bad news story, whatever it is, if it breaks the support and gold drops down, you have a pending sell stop ready to go. So fundamental news caused it. You could have a pending order just waiting in case that happens, just in case it reverses and breaks that support. Okay. No, we use other strategies, Patrick. We're just focusing mainly on price levels with what we're looking at for these long-term moves. Okay, so let's look at the pound. And I think we'll call it quits after we look at the GBP, JPY. Okay, again, we see an opportunistic situation. Support level here. Okay, support. If this was resistance in this area, resistance. It broke through, became support, and up. And here it came down, testing that same price level, support. Okay, and it's like a zone. Some of these support and resistance levels. You see the bottom here, and you see the top about there. Okay, so between these two prices is a support and resistance zone where it's trying to decide which way to go. Okay, and so right now it bounced to the top of this zone, trying to break out. The top of the wicks are here for the resistance. The bottom of these wicks are here for the support. So a pending order, what kind of pending order would buy if it breaks above the top of this resistance level? Resistance. If it breaks above the top of this support resistance zone and breaks into the clear here, what kind of pending order would buy from up there? In which case we would program it to buy what, from 140 point maybe 140.10. Yeah, it'd be a buy stop, exactly. So so we'd be looking at buy stop. So we could say new order, pending order, buy stop, buys from a higher point. We'd say 140.10. Why would I want to buy from a higher point? It seems counterintuitive. Wouldn't you want to buy from, now if you think it's going to go up? And the idea is you wait for confirmation of a breakthrough so that you feel better about the fact that it's an uptrend now before you buy. So you're willing to sacrifice some of the profit to get the confirmation of the breakthrough up out of this little cloudy zone between the support and resistance. There's a cloudy space in between. Once it breaks above, you see the breakthrough candles, the distance of these candles here and here. That's where the momentum picked up. That's where it took momentum to break below. Okay, so pending order 140, and then your stop loss would be below the cloudy zone down here, below both lines. 139, let's say 43. Again, this is a longer term type move. So my stop loss is a longer distance away. 139.43. It's about a 60 pip stop loss or so, something like that. And then I'm putting my take profit up here, somewhere near this major resistance up here, maybe this resistance level where you see the elbow and it drops. So maybe right around here, which is still 3 to 4 times higher than, or 2 to 3 times higher than what I'm risking. 141, maybe 4.5. Okay, so that's a good 135 pips up for my potential profit. And my stop loss is about a third of that. Okay, risking 60 pips for potential profit of about 135, over 2 to 1 ratio, not quite 3 to 1, over 2 to 1 ratio potential profit to risk. And it would have to break through this movement if it enters, if it opens. I was thinking I did a market move for a second there. If it breaks through, or when it breaks through, eventually it will, right? Whether it's soon or later. But once it breaks through and triggers your trade, you're risking only about 35%, 40% of what your potential profit is. 2 to 1, not quite 3 to 1 ratio, potential profit to risk. It looks like a nice move, and you're waiting on confirmation for this little elbow to be broken, this little resistance point here, which is right where it's stuck right now. If it breaks through there, boom, that triggers your buy, and you have the potential for a nice profit to the first resistance level, not to mention the second resistance level. If you want to do a partial close when it gets up here, you could do that and ride it up the rest of the way potentially. Okay, nice opportunistic entry points in today's session. They really look like spots that you have a nice potential profit compared to risk because of where the movements are right now after a few days of pullback. I think this is a good place to stop. I wish we had time to look at some of the other assets. GBP USD, maybe we'll take a quick peek at that, as someone asked a while back. And again, this looks like an opportunistic entry point, doesn't it? Resistance level, resistance became support. We see it here, resistance, resistance, breakthrough, support, and it becomes support once again. So a stop loss down here, a buy on GBP USD maybe. Okay, small risk to 1.31, let's say 27 to get below that first support level. 1.3127. Okay, potential profit. That's up to you how patient you'd want to be. First resistance level looks like it's about here, 132.30. If you're going longer term move, a more major resistance level, this little elbow here. So we're looking 133.08 maybe, potential profit or take profit. Okay, so we're talking very limited risk compared to your potential profit, which is about 4 or 5 times greater. And that's a market move because it looks to be in a great spot. I did more of a scalp setup on that one because it seems to be in a nice spot. And so I only went below one support level. Easily could break. It's okay. You take this move because you're okay with a small loss if it breaks and hits it, and your potential profit is much, much larger. Okay. After that headline that said the economists really aren't taking this no deal Brexit fear seriously, that the economists are shrugging that off, it feels like the fundamentals might go with that support level to hold, and maybe it'll bounce up. Okay. If you want to be more patient, you could put your stop loss, if I can activate it here, you could put your stop loss below this support level, and then you're less likely to have it hit. And then you have more of a 1-to-1 risk to potential profit. Okay. So a more patient trader, maybe you take a smaller trade size and you put your stop loss below 1 and 2 support levels. I don't like that setup because that's quite a distance down. And maybe this is just a scalp move. Okay. With limited risk. Okay, quick peek at the dollar index. I know I said I was going to end things, but we've got a nice big crowd today, so let's get as many assets in as we can. Let's look for the dollar index here. We see on the 1-day candles, the dollar index is way, 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 way down. You see that, way down. And we have to go to 1-week candles to get even more perspective. And we start to look and say, okay, 1-week candles at a support level here. Support, support, support. And look what it's below. It broke that support on the 1-week candles. Look at the momentum it took to break that support level. It really came flying down on the 1-week candles. It broke right through this support level. And then now it's acting as resistance, right? So if the US dollar index breaks back above this 1-week candle support level, okay, if it breaks back above that resistance level now, you see the broken support from over here. If it gets back up here, that might be a spot to have a buy stop because there must be some momentum for the US dollar then. So I like 93.6 as a buy stop entry on the dollar index. Technically speaking, it's a pure technical setup. I don't care what it is that causes the US dollar to strengthen. The fact is, if it breaks that resistance level, that's a major support level that was broken. And as much momentum as it took to get below it, if it has, it will take a lot of momentum to get back above, and you could see a reversal of this right back up if it breaks above. So a buy stop up here at 93 point, let's say 62. Buy stop. Again, I like confirmation moves. Not trying to guess. I'm waiting for confirmation of a breakthrough back above that old support. 93.62. The more you keep yourself from guessing and actually using a strategy, many times the better off you do. Now my stop loss then would just have to be right back below, which would be down here at what, 93.0, let's say 92.90. And my take profit could be the next resistance level up here, 95.9. Okay, and so we place, and there's our buy stop. Look, that's a great technical setup. We've got a major support level that it just broke below, took a lot of momentum to get below it. If it breaks above it, you might project that there could be the same kind of momentum then that caused it on the way up. And so you could have a big run up as strong as this run down was. And if that happens, your potential profit is 3 to 4 times what you're risking. And all the while, you're not guessing anything. You're waiting. Someone asked, is this stuff tied to fundamental news? Absolutely. We just don't have to know in advance what that fundamental news will be, right? It can be anything that would cause the US dollar to strengthen. Whatever it is, maybe it's the stimulus package that gets passed. Who knows what it might be? Once it breaks that technical resistance level, which is a major one, it's on 1-week candles, you could have a huge run up to the next resistance. So I really like that setup. I'm glad someone asked to look at that because that's a really nice setup. The longer those levels have been there, when you start looking at 1-day candles, 1-week candles, the more significant they are and the more momentum it takes to break them. And once they break, you tend to have much larger movements than if it was a resistance level or a support level that was only there for a day or for a few hours, okay? All right, everybody. Adam, I'm glad you agree that that's your position as well. I don't want anyone taking positions because I said so or something. This is meant to show you the information and you make up your own mind whether it makes sense or not to make those moves, okay? All right, everybody. Thank you for joining. We'll be back at it on Friday, a bit earlier at 1 o'clock London time, 1 p.m. London time on Friday. All right, bye for now. Good luck with your trading.